Okay, good morning. I think it's Wednesday. Welcome to QuantBox Live, where we get our global macro one. We're going to take a look at all the global markets and see what has changed. My name is Wayne McDonald, and I'm selfish. Yeah, it's part of being an only child. So I wanted to do all this economic deep dive research, and it takes a lot of time. It's very complicated. So I built AI to do all the heavy lifting for me. Yeah, cool. See, I'm lazy. I want machines to do all the hard work. And let me tell you, it's hard work. I literally spent 3 hours yesterday just going through economic research, just yesterday. So to do all this stuff and to keep it updated in my mind and on my brain or on an Excel spreadsheet just got too tedious as the world got more complicated. So AI came out and I said, you know what? I need me some AI. And that's what QuantBox is. So it logs into all the different databases like the CFTC, the Commodity Futures Trading Commission, gathers all the gobbledygook data. And trust me, it's deep, deep, deep data. And we're able to import it, organize it, and display it for you with pretty colors that are easy to understand so you can make informed decisions. Well, maybe you like making dumb decisions. Well, I like making informed decisions. So, anyways, that's what I'm trying to do. But why would I try to like organize my thoughts and make intelligent, informed decisions? Because I want to let my winners run. And for that, you need confidence. Okay. Is confidence in your investing and trading worth 80 bucks? Maybe. Depends on how much money you got, right? So, anywho, I bring confidence to the table and I offer it to you as well so that you can organize your thoughts. Here's all the things I'm interested in buying. Here's all the things I'm interested in selling. And all these things I'm just kind of watching to see which way they go, right? So that's how we or why you use the QB. Okay. So, anyways, there's an $8 trial. I suggest you take it, YouTubers. YouTubers, you're watching this many hours late, but then I also forget to upload the video. So you might go days without videos. I forget. I do that as a courtesy. So, anyways, sometimes I forget. Sorry, YouTube. So maybe you should swing by and pay the money and always be informed. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So, one of the things on my to do list is to update the QuantBox training course and add more. Add more. More training's coming. I've decided, and you know, like a crack of a whip, it'll get done within 6 months, probably. Okay. But it's on the list, it's on the Wayne stack, things to do. I'm going to try to do them this week. Uh-oh. Now that's sort of a verbal commitment, right? That's why I did it. So I'm going to try to update that and add, I don't know, probably 4 or 5 more lessons. Okay. Why? Because since I made these videos, QuantBox Pro has received at least that many major upgrades, major benefits that are not even listed on the homepage. So, yeah, lots of to-dos. So, anyways, Guten Morgen. Life is great. Life is good. Life is beautiful. Except for the Google Cloud. It says you have to log into the proper. Okay, fine, Google Cloud. By the way, thank you for waking up super early. Some of you are here at 6:30 in the morning, maybe even earlier. All right. My eyes go from right to left for some reason. I don't know why. Anyways, I always go here. I got money on this one and it's working. Good, good. Okay. Drifting down. I think yesterday was 4.6. I mean, not a major move, but down is all I care about. Okay. That's neat. Holy smokes on oil. So remember, I was trying to buy it around 82, 81. And I said, if that didn't hold, I'm like, I don't know where the next bottom is, 65, right? and chow, like here we are at 76. You're like, holy smokes. What's going on there? China, China. Okay. It's not good. Okay. So down. And I think was that slightly German on that one? It's not good. I don't know. Anyways, bad. Okay. Gold just farting around doing nothing. S&P 500 up, but not much. Now, I'm worried because a couple of days ago we had Kashkari. He said something like, we don't have to cut interest rates next year. And part of this rally is people pricing in rate cuts. This is all about the cuts. And then Wallen yesterday said, said something that could pull the stock market down today. And I think we have a testimony by Powell not a testimony, but a speech to somebody. And I think he will still say higher for longer or high for longer, which is just a fancy pants way of saying no cuts. We're changing cuts, like delayed cuts. So I believe there's still some irrational exuberance in the market. And I don't know. I'm a little bit worried about today. That's all I'm saying. That people calm down. Looking at the stock markets globally since the beginning of the month, up, 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 up. Wow, huh? Okay. Amazing, right? So big up. It's been a big week. Was it 7 trading days in a row of up? It's like, how many times can you flip a quarter and get heads? 7 a row. Can you do it an eighth? Well, that's not a good example because the probability is the same always. It's a trick question, right? But it's always 50-50. But we all know that, yeah, the odds are the same. We'll do it 8 times in a row. Bet you can't, right? So, anyways, the higher it goes up, the more people want to take profit. How about that? I'm testing 2 new strategies that produced 5% last month. Oh, oh, amazing. Anyways, let's move on to the gauges. Okay, the gauges. Oh, Burns posting news. Okay. Anyways, let's look at what we got. See, this was a 4, and then it was a 3, and now it's a 2. So things are cooling off a bit. Okay, things are cooling off a bit. Yeah, that's all. I think it just shows. I mean, what if we go back, well, I don't know, 30 days ago, this was like heavy risk off, heavy risk off, heavy risk off. And then it was slightly risk off on the, or I think neutral. Then it was neutral sort of on the short and medium term. And now it has been very risk on. And now I think it's going to fart back to neutral, which I think actually makes sense. So we're going to have to rely quite a bit on technical analysis to prove whether this is lasting. Taking a look at the scatter plot, Bitcoin up 2%, and it looks huge, but that's nothing for Bitcoin, right? And of course, if you trade Bitcoin, you know it was way up, and then it dropped probably several percent. Now it's back up. There was a spike yesterday. It jumped like $3,000 in about 15 minutes. Anyways, crowded, huh? Flat. Remember, What I'm trying to train you to do is with your eyes, figure out what the trend in this data set is. Is the trend bullish? Is the trend bearish? Or is the trend flat? Okay. Well, you don't have to be a rocket surgeon to see that it's pretty flat. So no trend right now. Be careful. Nothing's happening. Be careful. Go to boop 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 boop. So very bullish on both the DAX and the Nikkei and the stock markets. So why don't we look at those? Japanese stock market still just cruising on. So we had a rally for right at the beginning of the month, like most things, and then a cooling off period the last couple of days. Projections here have it going back up modestly, probably just slightly above 33,000. Target 7 days from now on November 14th. Wait, today's not November 14th. Today is November 8th. Well, best case scenario by November 14th will be at 33,124. Okay. Worst case scenario. Okay. We're down there at 847 down in here. All right. You see that? So, anywho, cool. Typically, the market does go up somewhere between September and October. Nikkei typically goes up, and this year it dropped an extra month and then rallied. Well, we got that in a lot of different things, right? Again, I think that sort of lack of congruency in what happened this year versus seasonality. I honestly think that has to do with the Hamas attack on Israel, threw everything off for a few weeks. And then it looks like we're trying to continue mission. That's our job right now to figure out, are we going to go back to a normal year where essentially, let's say these stock markets generally work their way up higher until, December-ish? Do we have another like 5 weeks of stock market rally? I really hope so. Okay. And so, anyways, you can see, yeah, nice little turn. And this is one of the assets that we want to watch. Okay. 79% of institutional investors are short the Japanese yen, which is another way of saying long the Nikkei. Well, I suppose, Brian, right? Brian saying that he heard somewhere about like 80% of the time the market ranges. Yeah, but maybe, but this is why we use seasonality. So if it ranges 80% of the time, but 80% of the time when it breaks out of the range, then there ain't no range. There's just times when you trade a lot, and there are times when you don't trade so much. And everybody else says, it's ranging. And if the market makers aren't taking your money, then your broker's taking your money. Somebody's taking your money. Nobody ever said it ain't, you just don't know. So, right. So, anyways, yeah, that's why we have seasonality. So, like, you look at this and you're like, when do you want to start participating, okay, in purchasing the Japanese stock market? And you're like, somewhere around September, October, I want to get involved. And the rest of the time, when it's not really doing much, you're not interested. You're looking at other assets. and everybody else is complaining about the range. Okay. And you're like, where? The deer and the antelope play? They're like, no, where my money is stagnant. Oh, I don't go there. Doesn't sound like fun. Yeah. No, but it's true. We could take a look at DAX. DAX is performing. DAX is the German stock market. So, hey, America, it's like the S&P 500. Europeans love trading the DAX. Very popular. So many Americans probably never even considered it, but it's very, very popular. Once again, according to QuantBox, only looking back 20 something years, only 20 years of data suggests that, you know, around this September, October period, this rallies up. Well, it took a little longer this year. Again, I believe it's the conflict that threw everything off, freaked people out, and for good reason. Okay. But now we seem to be back on trend. Look, the 20-year average, the 5-year average, and now here we go. And yeah, it's been up for a while. Okay. It was flat at the end of October. And then around the first of the month, it started to rally up. Then we've had a little couple of days or several days of cooling off. And then if the trend continues to the up, then by the 14th of November, we'll be at 15,500. Cool. That's some up. That's some nice. Could be, right? Now we know technical analysis could bring this down slightly more. Okay. So you might say, well, what about this level, Wayne? I'm like, yeah. So therefore, you would do your worst case scenario. Okay. That it might dip, right? Might dip down a little bit more just to basically 15,000 and then rally up. And in a week, we'll be, about where we are now, but cruising higher. Okay. Because remember, no matter what, even if you're a bull, you have to expect that the market's going to dip back. So in this way, you can say, somewhere in here, you want to be a buyer again if it does that. And then in a couple of weeks, will be higher than this high. Just won't be this week based on your linear projections and the current variance from the mean. Oh, this update's terrible. All right. So, anyways, there you go. It's bullish, but not very bullish like the Japanese stock market. Okay. Mm-hmm. How's the FTSE doing? Ugh. Ugh. And that's how I feel about the data that I see on this thing. I look at the economic data and it's horrifying. It's really horrifying how bad it is in the UK. And based on the 20-year average and the 5-year average, this normally is going up right now. But inflation is bad, the economy is bad, the trend is bad. Seasonality, it should be up. Okay. Sentiment is bad, labor's bad. It's just like it's bad news bears. And what's happening? Well, if you analyze all of this, remember what QuantBox is doing is the math. And it's trying to find not the average, but the mean. See, the average is horizontal. I don't really care about average. I want to know the mean and the slope of the mean. Okay. Then you got to do variance and you got to do all this other stuff. And then you calculate standard deviation. And then you take the slope of the mean and you continue it forward. And long story short, if you do the math, it ain't up. Seasonality says it should be up. It ain't. Terrible. But cheer up, everybody. Unless you're British, I'm sorry. But maybe in this period, we make a lot of money selling the heck out of it, huh? Because it will want to fall for normal reasons. Oh, and it's heavy. Okay. It's like carrying a bowling ball to the top of Machu Picchu. The bowling ball says every step, put me down, put me down. Gets heavier and heavier. Yeah. All right. And the S&P 500, we can take a look at that. And it's neither here nor there. Okay. I, you know, I'm glad that it's up though. So a while back, I guess near what, 2 weeks ago? So in this period here, I guess I should use my drawing tool. In this period in here, somewhere in there, I don't remember the precise date, hedged. And I think it was I believe it was before before Halloween, which is here. I exited the hedge, and I've been thinking about re-entering the hedge, but it's working. This up is working, and actually, to be fair, this is an active hedge where I was triple leveraged short the S&P 500, and then I removed that. But I'm actually, the way I've constructed my portfolio. Oh yeah, I forgot about that. I'm still hedged. I'm just indirectly hedged. All right, so that reminded me. Today is Wednesday. If you're in my stock trading course, I'm going to teach you how to predict a recession before everybody else even knows. You can protect your money. You can go to cash. You can hedge. You can do, I don't know, do whatever. Do something. I'll give you probably a 2 month heads up before everybody else. It's not a lot, but it's enough. If you're one of the first 10% out of the market and hedged, and the other 90% aren't, then guess what? It's like getting off the slope an hour before the avalanche. It's enough. It's still cutting it close, but it's enough. Trust me, because if you're on the slopes and you hear the avalanche, it's probably too late. Okay. Have you seen the avalanche video that some guy took on YouTube? It's like a million miles away, and he's on the slopes, and he's like, "Oh, look, an avalanche." And it starts right at the top of the mountain. And I'm telling you, it's a million miles away. And it gets closer and closer and closer and closer. And then it just goes right over him, and camera goes out. You're like, whoa, too late. Doesn't matter. Once it starts, it's too late. So, anyways, I want to get you out of the market a couple of months before the recession hits, so that you can protect your net worth, because this is what I want to do. I want to protect my net worth, and I have done it before. So now the other next step is, then when there's blood in the street and credit has gone to zero, and net asset values have plummeted and everybody is scrambling, you're the only one with cash, and cash is king. Okay. Whether you buy a house for half price, a car for half price, and I've done both during bad times when there was no credit, banks were not loaning. I just had piles of cash, and people needed the cash more than a car. And trust me, it sounds like a bad capitalist pig dog thing. Like, you bought someone's Mercedes for half price, you're bad. I'm like, well, why don't you talk to him and ask him? Because what actually happened was I saved his mortgage for a month or two while he regrouped, and he was able to not have his children thrown into the street. He shook my hand. He may have even hugged me when I paid him $27,000 for a $65,000 car. Huh? When was the last time somebody hugged you for that? He needed the cash. Okay. So, anyway, hey, you got to be just a little bit before the avalanche. And I'm going to teach you how to do that today. And also remember that what's the point of that? Well, A, to protect your money, but then how do you know when to get back in? How would you like to see the last 40 recessions? And I'll show you like how our analysis would help you early, and then how you get in. Getting back in is also the big thing. One of the biggest sins I've seen since the 2008 financial crisis is people didn't get out. That's a big sin. But even worse than that, because you would have done fine doing nothing, actually. You would have watched your net worth drop by 50%, but then it would have recovered. I don't like that when you pay a financial advisor to manage your money for you and then they do nothing. Then I don't need to pay somebody to do nothing, right? So, anyways, but the next thing is for those, um, the next big sin is they never got back in. They were just, and I don't blame them. This is not me blaming people. They were so afraid and battle scarred by watching their net worth drop by 50% that they're just like, protect it all. And that's the worst thing you can do. Okay. And they never got back in. Never. I mean, 10 years later, they're still hoarding cash. Cash is trash. And now we got inflation. Okay. Anyways, I want to give you the strength and fortitude to be able to buy back in near the bottom. And you're like, well, that's good in theory, Wayne. Okay, well, I'll show you the last 20 or 30. I can't remember. I'll show you a lot of recessions. And most of the time, where I show you to get back in is pretty accurate. Is it perfect? No, of course not. You know, it wouldn't have worked in one of the recessions like 90 years ago. Right? Do you remember? Right? Do you remember that recession back in 1894? Well, it didn't work that year. I'm sorry. You would have gotten it in a couple of years early. Ooh, but, anyways, in modern times. So I'm looking forward to it. That's at noon. Okay. Coolio. That's at noon. So yeah. So let's just look at where we are in the S&P 500 today. Looking at the hourly charts, let's break this down just to see where we are. This is another form of a risk gauge. This is risk off. This is bearishly neutral. I mean, bullishly neutral. Hang on, sorry. This down means the Nikkei up. Okay. So right, if this is down, that means the S&P 500 up. Well, we're not there yet. Okay. This down probably means the DAX up, which is German. And you're like, but that's Swiss. Uh-huh. So let's say not quite risk on yet, not quite risk on yet, and it's not risk off. Okay, like it's still generally weak, but it's stabilizing over the last day because this updates hourly. So not quite risk on, just slightly ever so much risk off in the moment. Okay. Aussie got crushed yesterday because they're probably at the end of the rate hiking cycle at 4.35. Most likely. We'll see when the next time they do a GDP print, but my estimate is zero point 0.0. It's it. They're at that point now. Okay. And that drop in oil yesterday was bad Chinese data. That's not good for Australia. Anyways. Okay, euro going up is ever so slightly risk on. We don't have it according to the dollar. Okay. If pound is going to try to head back up, it has to do it now. Otherwise, it's a mirage. A sabotage. Bum bum. Bum bum. Okay. So, anyways, it's got to go up now if it's going to. I don't have a lot of faith in it. I don't want to own pound. Okay. Yeah. Yeah, I'm seriously thinking about visiting Scotland. Scotland! Uh, Now's the time when the pound is at these prices, huh? Mm-mm, mm-mm. Gonna visit my castle. All right, so I want to look at the stock market. Yeah. Okay, so the question is, do we have enough up? Do we have more up? Okay. Okay, there's that bottom on the end of the month. Now we're way up here, and this week, even after this giant rally, um, I was concerned about this week, and I'm still concerned about this week. It's just there's not a lot of news, so I'm just wondering what's going on. Um, but it's holding up. Okay, so it kicked off a pivot, kicked off a pivot. It's kicked off a pivot. Like it hasn't begun to fall yet, but I'm concerned that it will. And I believe a lot of this rally is sort of a relief rally, but I think it's premature. I think it's a bit of a guess, a bit of a gamble, bit of misinterpretation of what the Fed is saying, and a lot of just the ostrich sticking his head in the sand. So I have concerns about it. I'm enjoying it. Don't get me wrong. But I think there's a high probability of this yet. High probability. Maybe just not at this price, but it could be. Okay. But it didn't respect this number. Okay. This pivot. So what I need to do is say, as long as we're climbing these, right? And as long as we're playing that moving average, okay, this moving average here, everything is right as rain. If we dip below that 21 EMA, concerns. Okay. And concern, we look at it like this. Just imagine we repeat something like this and it happens in here. It's a concern. I don't have it technically. I should just, ignore it. Ignorance is bliss, right? Ignore it. What do you need to worry about? It's going up. Don't worry about it. Okay. So, anyways, that's that. So every day I've been watching the stock market, worried about it falling. But right now it hasn't. Everything's fine. Cool. Maybe it'll be next week. There's not a lot of news this week to turn it, except there's lots of Fed speeches. Jay Powell is speaking today, and I don't remember what time. You'll have to Google it, but it could be one of these things where out of the blue, you get a red candle, big, giant, engulfing candle. And Jay Powell said one sentence, and all your technicals are gone. Okay. But the thing is, be careful. So if you're in short term trades, Google it, Google it and find out when the speech is. If you're in trades for the next 20 years, forget about it. Don't worry about it. Forget about it. Cool. All right. Anything else? I guess one last thing is I'm going to be sending out emails pretty soon about two different things. One, uh, amazing news about QuantBox. The thing is, the developers are not done. So maybe it's next week. But I got some cool things I'd like to, let's say adjust. And then sort of a big question, right? I want to announce something we can do. And it's a giant leap, not even like a big upgrade. Like I did some big upgrades. Like, how'd you like to predict interest rates and inflation 18 months in advance? Oh, all I have to do is log into the OECD databases and pull it all together so that you can do your central banking research 18 months in advance. And you're like, oh, yeah, that's nice. How about something 10 times bigger than that? The thing is, it's going to cost money to do. So I want to know if you want to do it. But imagine sometimes something 10 times bigger than that. And I think you're going to want to do it. Right. So I'll let you know. But I got to do some other stuff before I let you know. And anyway, so maybe it's next week. We need to do an all hands meeting at QuantBox, and I'll tell you what can be done. Okay. One other thing is December 13th, we're doing a mixer and a party and a dinner in Nashville, Tennessee. Why? Because we can. Okay. Because we likes to party. It's the capital of country music. Have you ever heard of the Grand Old Opry? That's actually where we're going. Now, we're actually not going in that theater, but it's right there. Like, this is the epicenter of country music. Yeah. So, we are all going to meet to have dinner and cocktails in our church clothes in Nashville, Tennessee on December 13th. I'm putting together a website for it. I just need to triple, quadruple confirm things with the horrible, horrible, horrible staff at this wonderful hotel. And just want to triple, quadruple check everything's done. That'll probably happen today, which means maybe today or tomorrow, sometime very soon. You'll get an email for that. And I hope you sign up. We'll check it out. Okay. So, a lot's going on in the world. Luckily, it's a wonderful world. Peace on earth. May the pips be with you. May your profits be above average. I'll see you in a bit.